Okay, so I wanted to make a video on using entries based on counter trends, support and resistance, but I feel before we head into that video, it's important that you know how to set up stop losses, because if you were to go ahead and open a trade, which we already did in the last video, and you don't know how to set up stop losses, then it's kind of scary, right? And also I've seen a lot of people continuously requesting me or other crypto Twitter influencers where to put stop loss. So I just feel like, especially in a time like this when the market is so volatile and it's moving up and down like crazy, it's important that you have a clear rule set that this is what you're going to use to establish a stop loss given whatever the conditions. So one of the tools that I like is average true range. We call it ATR, and the reason I like it is because it's extremely minimalistic, right? So right off the bat, let me just show you what do you need to do in order to get this tool. Again, go to indicators, right? Come here and write minimalistic ATR. You're going to get one from floppy disk. I really like it because it doesn't occupy the space on my chart and it's just the number that I need, right? So you can go ahead, click on this, add it to your favorite if you need, and it'll appear right here. So what is ATR? In short, ATR measures the volatility of the market at any point of time, and it uses the last 14 candles in order to determine it, if it makes sense. So for example, let me just delete this. So delete so that I can move it. Yeah, let's look at this, right? So let's say I have this, okay, magnet tool is off. Let's say I have this setup, right? We can take this. I hope this is 14 candles. Let's say I have this setup and then I have this setup. I'm assuming this is 14 candles. No, definitely more than 14 candles. Let's just make it like this. And let's just make this like this. Now clearly this 14 candles, I'm sure there are more than 14 candles, but imagine if there are 14 candles. These 14 candles have a lot more price action compared to what we are seeing now, right? In this, there is movement in this segment, but the movement is not so dramatic, whereas the movement here is extremely dramatic. So based on these movements, you must always decide your stop loss. The reason is, after these moves end, they always signal kind of an end of a move or a reversal. What generally happens with these kind of big moves is the price will immediately trace back, push you out of the, let's say you were here, right? Like let's say you're here and you're saying like, hey, the price has bottomed, I'm gonna long. What happens? The price comes down, takes you out of your position, and then it goes, right? So you must have observed that a lot of times you enter a position and then you get kicked out of your position, and then the price moves the other way, which you had initially anticipated. So again, it's important that you always look at how volatile the market is before deciding your stop loss, if it makes sense. So what does ATR do? Well, ATR helps you understand at any point of time how fringe or how volatile the market is going to be, if it makes sense. So when I see this number, right, this number keeps changing. This is nothing but pips, P-I-P-S, which is generally referred to as percentage in points. Again, don't want to make the video too long, so I'm not gonna bother explaining. All you need to know is that you don't need to know what it means. You just need to know how to add it. Add or subtract, whatever way it works for you, right? So I'm gonna start cutting it down and then using it. So let's imagine we are here. Like I've cut this. And all the market indicators are saying, hey, the price has bottomed, right? Like this is it for you. And you're expecting a long position. So you want to set up. So what you do is you wait for one green candle. Okay, now that you've got your green candle, you want to enter a long position at this point of time. But at the same time, you don't want to get stopped out. So ideally, what would you do? In a normal scenario, when we are setting stop loss, you will see, hey, the price reached this level, right? This is the bottom of the candle. And this is where the price stopped, like at this point. Let me just mark this line. So let's imagine. And you're saying, hey, this is the level at which the price stopped. I'm going to take a position here. And I'm going to set my stop loss exactly on this red line. So that, just for safety, because this is where the price had stopped. Now, unfortunately, this is not how it works, which is what I tried explaining, right? The way it's going to work is this. The price will increase, but there is going to be a pullback. Most often than not, whenever this pullback happens, you exit your position because you had kept this as your stop loss, right? And then the price moves the way you had thought it would move. So what do you generally do and how do you use ADR tool? At this point of time, this is what I'm going to do. I'm going to come here, and do you see this thing that says long position? You use it for long. I'm going to use this position, and I'm going to come here and say, hey, I am entering at this point. The long position tool starts signaling to you that, hey, this is the range you have, right? At this point, exactly at this point, my ATR is 1213, right? So how do I set my stop loss? Well, first thing I'm going to do is I'm going to mark the nearest support. Right? This is my nearest support at which I expect the price that it may come here. So I'm going to mark it and I'm going to bring this channel right here. I hope it makes sense so far. So now that I have it, I can see it says stop. I'm reading this 1005, right? I know this is 1005. I also know my ATR is 1213. So this is what I'm going to do. I'm going to write here stop loss is equal to support plus ATR. So in this case, my support value was 1000 and my ATR value is 1213. So I am going to take a total of 2213 position as my stop loss. So what do I do now? I have this 1000 here, 1005. Right, let me just change it to 1005. 1005, 2218. Okay. I have my position as 1005. I have my ATR right here, 1213. I have my ATR as 1213. I'm going to drag this down until it becomes 2218. Yeah, this one looks good to me. And whatever ATR I have set, I'm gonna look at my risk reward ratio. I want to keep it at least a minimum of 1.2, right? That's the minimum risk reward ratio we should have. So I'm gonna go ahead and increase my target and say like, hey, when the price reaches here at a risk reward ratio of 1.2, I'm going to exit my long position, right? I mean, again, it depends on how you want to play it. Some people play 1-to-1 risk reward. Some people play 1.2. Some people play 1.4. I would not suggest going more than 1.4, as it just means that you are influencing, like, you are susceptible to a lot of other externals, but again, up to you. Now let's play it out. So it comes here, it comes here, okay. It comes here, we have set the stop losses. Okay, we got the green channel. What happened? Trading view did not work out. I have to do it again. No, I'm gonna use candles to go again because it stopped. And we'll do it again. Boom, 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 boom. Okay, so you can see here clearly, had you used this support as your stop loss, you would have been out of the position at this point. But because you used ATR, you are still inside the position, if it makes sense. And you're still inside. And at this point, you have met your target. You can safely exit. Hope ATR makes sense. If you want, let me just do another example. If you have understood it, the video is as good as done. Now I'm just doing another example. Let me see. Let's say I have come here and I've seen, like, hey, this is double bottomed and I'm expecting the price to go long, right? So this is the point where I'm at, and I'm like, okay, I'm gonna enter the position at this point. So what I do is the same thing. I'm gonna come here exactly and I'm gonna introduce myself to this, right? I'm gonna put, and I know at this point of time my ATR is 1310. What is my nearest support? Now if you have done support, you know upper candles will go as support. So this, I think this has multiple repetitions to it. I'm going to use this as my support, right? This is my area of interest. This is my level. Now I'm gonna bring this back to this point. And now I have one, I'm gonna use the simple calculator. Wait, let me make it big. Yep. At this point, what do I have to do? I know my ATR is 1310, right? And I also know my position here. So it's going to be 1100 plus 13 plus 1310 is equal to 2410. I'm going to use this as my position. This is 1183. 1183. And my ATR is 1310. So this should be 2493. I'm going to use 2493 as my reference value. So I come down 2493. This gives me a decent, and now I want to set up a risk to reward ratio of 1.2. And we've got the risk and reward. This is the area I'm gonna play at, right? And I'm gonna make it bigger so that let's see how it plays out now. And do I hit stop loss? Let's continue. So in this case, the support line acted as a decent support, like the price did not go, but a fail-safe mechanism would have been to set this up with the support plus an ATR value. Hope this is what this really helps you in calculating stop loss. And yep, see you around for the next video, because the next video would be entries using support and resistance.